Is my IUL structured properly? This is a question I get quite a bit. Almost every single day I run into somebody that has an indexed universal life and they want to know if it's structured properly. Furthermore, you may be deciding whether or not you want to buy one and you're just trying to figure out whether or not you're going to be able to find an agent that actually has your best interest at heart and is going to structure it the way that you intend to based on what your goals are and how it aligns with your IUL. So let's dig into what that looks like. What do you need to look at that can clue you in as to whether or not your agent did what you intended them to do when they designed your IUL? First thing you want to look at is your death benefit. Every indexed universal life policy has a death benefit because it's life insurance. Now, to the untrained eye, we may look at a death benefit that's small and think, well, that's not a very good policy. Why would I be spending my hard-earned money every single month for only $50,000 or $80,000 in coverage, right? Well, if your goal is cash value, that probably means that your agent did exactly what you told them to do. Because the more of your premium, that monthly payment that you pay every month, that goes towards the death benefit, the less money you have actually responding to the market. Let me give you an example that is not based on a real life individual, just throwing a number out there. Let's say you're spending $100. You're spending $100 a month and you have an agent that gives you a large amount of life insurance for that. Maybe because you're young and you're healthy, you qualify for a large amount of life insurance, you get a great rate and they tell you, guess what? You've got $500,000 worth of coverage. That sounds great outside looking in. But if you're only spending $100 and you've got $500,000 worth of life insurance, assuming there's some cost associated with the life insurance, the $500,000 in death benefit that you're paying for, there's got to be very little, if any, responding to the market in this example. Now let's flip it. Let's say you tell your life insurance agent, I want an IUL, I want to focus it on cash value. And they come back with, all right, well, that's going to make your life insurance benefit $80,000 or $50,000, right? And the rest of your premium is going to be going towards the cash value. What I hear a lot from my peers, other agents in the community, and I also hear it from clients too, is that's not enough life insurance. So you have to decide what you prioritize more. If you want to build the cash value, you may have to sacrifice some on the life insurance side. Then again, you still want to make sure that your agent is compliant and making sure that there's enough life insurance there to sustain the growth that you anticipate based on your premium. To put it simply, if you have a very large death benefit and you're not spending a lot of money every single month, then you probably don't have an IUL that's structured towards the cash value response to the market. You may actually have an IUL that's structured more to keeping that life insurance in place for the rest of your life. And let's face it, that's a wonderful benefit. We all pass away at some point. But if that's not what you intended for your policy, get in touch with an agent and figure out whether or not you can look into something that makes more sense for you and your family. I hope that helps, guys. I'm new to the YouTube community. I'd like to put more videos out there to help people feel educated throughout the process of building a legacy for the people that they love. And I understand how important it is. So if you have any ideas on how I can be more helpful to you to feel like an informed consumer and an advocate for the people you love the most, drop something in the comments, give me some ideas. I'd love to hear them. I am a licensed agent, so I'm definitely qualified to answer your questions. I look forward to hearing from you guys. Talk soon.